This has to be one of the most diverging markets I've seen in a long time. Unusual price action here at the open. Let's take a look at the E-mini NASDAQ. I'm going to turn on pointer tracking in TradeStation. You go up here to this T and you turn it on for workspace, and it allows you to say click on the low of the day, and you see the vertical line on all the other workspaces here. I'm going to show you that. And you see there's a vertical line here at the same time of day. So you can see the same time of day where all these other markets were at that same time. And so here is the price action. I want to go back to this price right here. This was a low price in the mini NASDAQ on the day. Right here at, what time was that? 9:37, actually 9:36 was a low. The 936 bar showed a low on the day, and over here on the advanced decline line, which measures the number of NYSE stocks in an uptick minus those in a downtick, it shows that is also, that's the low the day for that. And then after that point, there's just this massive surge in the advanced decline line. But this surge started on the 937 bar. So it goes up 937, 938, 939. And then what happens? 940, 939 here, 940. It has a little bit of a step back, but the surge is still in place. While the E-mini NASDAQ, boom, it surges down here at the lows. It's surging for 9,500. You see that strong move to try to hit 95, or not 9,500, but 7,500. So the low is 7504.25 on the day. And so the futures, the broader market, I've never seen such a divergent price action that I remember. It's possible that it's happened, but I don't remember ever seeing the advanced decline line start to surge and then the futures surge down, a few minutes later to new lows. That blatantly, it's been a stop running month, and you see that happening during August sometimes. And so that really happened big time this morning. Pretty obvious stop running when you look at these numbers. And so the market just took off in just a straight the advanced decline line is pretty much straight up from that point. And so there's a diverging mindset between the futures and the equities. Futures oftentimes have a lot of short-term traders, hedgers coming in, and they can take different positions. The equity guys are usually just bulls. Sometimes there's a season of selling, but the bulls are just always looking to buy, and you see the strong surge in equities, an equity price action all the way till 10:10 before there's a pullback. And so even during this time period when it's so strong on the advanced decline line, you see these pullbacks. Here's one pullback from 9:57 till 10:01. That pullback occurs in the NASDAQ futures. It doesn't occur over here on the advanced decline line. The advanced decline line keeps chugging higher, and then you see the NASDAQ pull back again for a few minutes. NASDAQ, the advanced decline line stays up here, and then another surge. And so you finally see a little bit of a pullback in the advanced decline line right here, and then they both surge. And so interesting price divergence. I've never seen visibly on a several 1 minute bar basis that much divergence. Maybe intra bar. Those type of divergences are hard to capture, but it was pretty extreme today. Pretty eye popping to me watching this in real time to see that kind of divergence. And so wanted to let you know that it's something to watch for when you're trading, if you're discretionary trading. Or if you're developing strategies, you can look for these types of divergence. This is my market depth indicator workspace, and in that you see the market depth count, market depth cumulative, and then the trend line for that. And so you see E-mini S&P is up 9 on the day. E-mini NASDAQ is right around break even. And one of the things that we continue to see this month, we developed this strategy right here I'm going to turn this pointer tracking off. It did have one loser finally. It has, this is not a strategy that we're trading, not one that we recommend trading, but we noticed it because the pattern is so extreme. We've not seen something that is 19 of 20 and has $160 average trade profit. It surges at the open more than it usually does, and so if it gaps up, it goes up. If it gaps down, it goes down. And it doesn't usually do it that much. We don't usually see a market that does this that much. And yesterday, or 2 days ago, on Tuesday or Monday, you saw for the first time it got stopped out for the month. And so once again, this, if you backtest this further, you'll see that it has a positive equity curve, but it's not a good enough strategy to trade. And so let's take a look again at the performance summary. And this is the reason why a strategy like QS3 is struggling this month. So for example, QS3 got stopped out near the lows. We got stopped out on that surge down. The advanced decline line was headed up. And so this is more of a mean reversion strategy at the open. It's had an uncanny ability and a great back test, but this month it's just getting beat up by this pattern right here. Is extremely unusual. We have to determine whether this is a 1 month aberration because of a month like August is known for stop running and less liquidity, or if it's a 1 month aberration, or if it's a new normal. And so QS3 is just getting beat up because of this type of price action, and so we have to analyze this further and make adjustments accordingly. Let's take a look at some of the other trades. You see several times in a row it gets stopped out at this low. It gets stopped out at the low point and then misses the rally. And so oftentimes you'll see a strategy where you think, wow, a good entry would have been where it was stopped out, and then set a profit target back where I would have entered. And so sometimes you can make those adjustments manually and take a strategy like this and wait till you put your entry order at the stop loss, and then you put your exit order at the entry price. When you have such an extreme pattern like this in the markets, see, here it is again, 3 trades in a row, come down and it stopped out, and then boom, it rallies. Let's take a look at the previous trade. This market went straight down, but you see it did hit that stop and then bounce some. And so it's frustrating when you see a strategy that has that kind of price action. Here was the winner, and that was on August the 13th. Here's another one. Came down, got stomped out near the low, and then rallied again. And so sometimes you have market price action that's just completely opposed and in opposition to a trading system that you're trading for that month. And you wonder if you should stop that strategy or if it's just some extreme 1 month aberration. Here it is again. It went a little bit lower and then rallied here. This is on August the 7th, and this is related to that gap continuation in the direction of the gap. So let's go back here. And this is just a downtrend day. So it did bounce a little bit, but overall a downtrend. Here's another one. This went just straight through. And so QS3 has really struggled this month. And one of the reasons why, here's a winner in July. One of the reasons why is this pattern that we've seen develop where it just, instead of, any little gap down, boom, it goes down. Any little gap up, boom, it goes up. And this is the E-mini S&P. It's even more exacerbated in the E-mini NASDAQ. And so this is what I wanted to share with you today, what August is like. The stock index portfolio has done well, even though QS3 is in that. And so the portfolios are up on the month, but these patterns have been more tricky. It's been a stop running type of month, and but the stock index portfolio has performed well regardless of this. But I just wanted to give you some insight on the way I look at strategies. Here are some of the latest trades. E-mini S&P Night Trader is, it came down here, down minus 1,000. It's rallying back, and so we'll get the profit target for this one. It's important, you know, in the E-mini S&P, you have to have kind of a big stop loss with this volatility. So 28, 88, 25 is the profit target. So we'll see if it can make it up to that number today. I think a lot of momentum here, so I wouldn't be surprised to see this this market cross 2,900 today. Surprising given the fundamentals. The bulls really want this. The inverted yield curve and the fact that stocks are now yielding more than bonds could be a driver now. All of a sudden, that is the bullish information that's being propagated. Stocks yield more than bonds, so buy stocks. And we're going into a holiday weekend, so keep that in mind. Oftentimes when holidays come around, volatility goes down, and that favors the bulls. And so that is the update for today. Look for those divergences in the market depth, in these market depth type workspaces. Advanced decline line, it's at plus 1,000 now. And so this could turn into with this kind of momentum, I wouldn't be surprised to see a bullish day. I wouldn't be surprised to see it roll over and take out the lows. And we're just in that kind of volatility in August. We'll be keeping up with the updated results for the stock index portfolio and the other portfolios as well as we come into the end of the month.